how UPI is becoming the game changer. That can be a mains question easily, right? So UPI has achieved in the year financial year 24-25, UPI transactions have achieved 18,580 crore transactions. I'm not talking about money. I am talking about number of transactions, right? Very important. Project Nexus. Focus these keywords: cheaper, faster, transparent, accessible. These keywords enriches your mains answer writing. That is called priority sector lending. So ultimate aim of our governance is social justice and welfare of all, inclusive growth. What is digital footprint? Whatever the digital transactions you have been made, right? Debit, credit, investment, loan, etc. Okay, all that can be analyzed and assessed, okay, to understand whether are you eligible to get the loan or not. So there are certain issues in the go. Economics is not a subject which requires you to mug up the concepts and revise a standard textbook. Economics is a living subject. You cannot restrict to the class notes or standard textbook, right? You need to understand day by day current affairs thoroughly, right? Also, you need to connect them to the basics that you have learned from the classrooms. Hello, my dear students. Welcome all of you to my YouTube channel, Joyful God, which is meant to make your UPSC preparation easier and effective. This is the fourth video under my initiative, Easynomics, under which we discuss economics related current affairs, in fact, in a much detailed manner. So, under that, we have launched Jan to June series. So, in the previous three videos, I have discussed in detail important issues related to GDP, GVA. And in the second video, we discussed issues related to inflation and price indices. And the third video, we discussed issues related to financial policy and credit reforms. So, this fourth video is the continuation of the previous third video. In the previous video, we discussed issues related to central bank digital currency and internationalization of rupee, where I have touched upon not only the current affairs issues, data facts, as well as analysis of every issue, which helps both for your UPSC Prelims and Mains examination. In the current video, we discuss in detail the current affairs issues related to regulations introduced with respect to NBFCs, that is, non-banking financial companies, followed by RBI's biennial report with respect to payment systems. And we also discuss in detail with respect to what are prepaid payment instruments. And also, we will discuss in detail credit and lending reforms. Followed by, we'll also touch upon proposal to increase the FDI limit in the insurance sector. And lastly, we also discuss a much talked about issue, that is with regard to new draft rules released for gold loans. Hope you all enjoy the video. So, and the next topic is scale-based regulation for NBFC. So, you might have already known about NBFCs. What are NBFC? Non-banking financial companies. Non-banking, the term itself says they are not regular banks. So, how are they different from regular banks? Regular banks means they are licensed banks from RBI, right? You can say scheduled commercial banks or cooperative banks, etc. But NBFCs, how are they different? NBFCs cannot accept demand deposits. They cannot accept demand deposits. They cannot issue checks. They cannot issue checks, right? They cannot even issue debit cards and credit cards. Okay. But what they can do is they mobilize the investment. Mobilize investments, and they enhances the credit availability, right? They mobilize investments and enhances the credit availability. That means what? They borrow money from investors or long-term funds like LIC or pension funds, right? And equity, right? So they borrow money from various sources. They can even borrow from banks, and they lend the money for necessary requirements, like they can even lend for personal purposes. They can lend for infrastructural projects like housing, road, etc. They can even lend for agricultural purposes, etc. Right? So NBFCs, so you can ask me like, sir, this work can be done by bank itself because the bank also do the lending process. But NBFCs possess expertise, right? So they possess expertise so that they can understand where and how the money can be invested. For example, if they have to lend for an housing project, right? So that requires a deeper analysis into it, right? So banks do not possess that deeper analysis. So the banks do not possess that expertise, right? So that is the reason NBFCs play a very, very important role, right? So in 2018, there was a huge crisis, right? There were such big NBFCs like IL&FS and DHFL, Infrastructure Leasing and Financial Services, and Diwan Housing Financial Limited Corporation, right? So these big NBFCs, they failed, right? So most of their assets turned to be non-performing assets, right? To the amount of 91,000 crore for IL&FS, and for DHFL it is 84,000 crores. That means what? That means wherever the money it was lent by these two NBFCs, they become non-performing. So that is because of various issues. So some important issues are lack of monitoring, lack of transparency, disproportionate lending. Means what? So it's like some businessmen, they have an understanding with the managing team or those who are in the deciding role in NBFCs. So he will be given more loan, right? So without properly assessing the collaterals, right? So disproportionate lending, lack of transparency, right? And also one more reason was delay in the infrastructural projects. For example, if NBFC has lent to build a huge highway, like some 500 kilometers of highway, but due to various reasons, like for example, land acquisition or any other reasons, right? So the construction got delayed, right? So obviously the returns from the project would be delayed, right? So NBFCs cannot expect return or cannot expect its asset to earn the money. Asset means loans. So due to various reasons, these NBFCs failed. Since these are huge NBFCs, it created a contagion effect. Contagious or contagion effect. Contagion. That means what? If for example, if you catch cold, if you sit beside your friend, he will also, there is a higher probability that he might also get the cold, right? That is contagious. Similarly, if the big NBFCs fail, people start losing hope in the NBFC itself. So people start taking money from the NBFCs. Institutions lack hope or confidence in NBFCs so that it will be difficult for NBFCs to mobilize the money. It led to the breakdown of NBFC system itself. So RBI has introduced scale-based regulation. So I don't expect UPSC to ask like in detail what is scale-based regulations and what are the features of it. But the thing is, you should understand, if they ask in prelims, scale-based regulation is pertaining to what? Is pertaining to NBFCs. But we'll dig little bit deeper, because in mains they may ask what are the banking sector reforms, right? Or they may even ask what are the reforms brought in the credit system or make credit availability easier, or what are the reforms brought in mobilizing the investments, because it is very, very important, right? So Viksit Bharat Dream 2047. So to achieve that, India needs a lot of investments, both private and public. So we have to have a robust mechanism to mobilize the investments and channelize the credit for necessary projects. So that is why these banking sector reforms, investment sector reforms, or credit sector reforms are very, very important. So in that, NBFCs mostly they will be neglected, but they are very crucial, very important. So that is why you should know a little bit about this scale-based regulation, right? So what is that? Reserve Bank of India, non-banking financial company, that is NBFC, scale-based regulation directions 2023. They were introduced to regulate NBFCs, to monitor NBFCs, so that the breakdown which has happened in 2018 will not repeat again. Got it? So what are they? This scale-based regulation, proportionate. So the regulation are introduced on the proportionate basis. What is the meaning of proportionation? What is the meaning of proportionate regulations? For example, the smaller NBFCs, right? You can think it as a school, right? So the play home kids, they don't have to be monitored, because they need some freedom. They have to grow. They need to develop the creative mindset. So once you grow up, now the regulations will tighten, right? If you become a 10th standard student, So don't have to watch TV, don't have to go out to play and sit with the book and study. So because it becomes more important for you to perform well. Similarly, NBFCs also, they divide the NBFCs based on their quantitative thresholds. Like, what is the threshold? How much money they have, how much money they have lent, how much money they have borrowed. That is quantitative. Next is qualitative criteria, right? How qualitative the management is, right? Is the management transparent? Does the management possess necessary expertise, right? Based on this, they will scale the NBFCs, right? Those NBFCs which operate with less money, they'll be, regulated with less restrictions, right? So the proportion of regulation will be low. Once you go up the order, right, where the NBFCs a lot of money exchange, the proportion of the regulation will be higher, right? So that is what they have divided into basic layer, middle layer, upper layer, and top layer, right? So these are the division of NBFCs. Based on this proportionately, the regulations have been applied, right? So these are the some details: base layer NBFC, middle layer NBFC, upper layer NBFC, and top layer NBFC. So I don't expect UPSC to ask all these details, like what kind of, what is the basis of division. For example, let's say small NBFCs with assets less than 1,000 crore, right? And middle NBFCs with assets less than more than 1,000 crores. So I don't expect UPSC to ask such details. But what you should know is upper layer NBFC, right? So RBI selects upper layer NBFCs based on their interconnectedness, right? Interconnectedness means an NBFC, right, might have connections with many banks, lending institutions like LIC, pension funds, or any other investors, and also those who are borrowed, like there can be big companies, they would have borrowed from NBFC, right? There can be big corporate, they would have borrowed NBFC money from NBFC, or there could be big infrastructure projects, they would have borrowed from NBFC. So this defines the interconnectedness of NBFC, right? Based on interconnectedness, based on complexity, etc., RBI selects upper layer NBFC for more regulation, right? What is top layer NBFC? Those who are at extreme systematic risk, right? Those who are at extreme systematic risk, they need to be regulated very thoroughly, right? They need to be regulated very strictly. So proportion of regulation will be much, much higher. So these two differences, if you know, that's good enough. They may ask in prelims, like, so top layer NBFC or upper layer NBFC, right? They may ask like upper layer NBFC which poses highest systematic risk. That's not true, right? So it is only true for top layer NBFC. So these details are good enough, right? So what are the objectives? Why these regulations are introduced? So these objectives are very, very important when you talk about banking sector reforms. These keywords, I am bringing these objectives for you to remember at least the keywords, not in detail. For example, let's say mitigate systematic risk or mitigate contagion risk. Can you see? These words are very important in your mains answer. Contagion risk. If the big company fails, then smaller companies also start failing, right? Because the investors start losing hope, right? If the big company itself is failing, what about the fate of smaller companies, right? So this is called contagion risk, right? And the regulation must be done proportionately, because the smaller NBFCs need more freedom, right? Because they have to, they have to bring in more creativity, more innovation, right? So they need to be given more freedom, and they possess less risk. They possess less risk. That is why the regulation must be done proportionately. Then strengthening governance and risk management, right? There need to be a mechanism to manage the risk. For example, if the money is lent to some project and that project is failing, right? There need to be a mechanism to manage the risk, right? What could be done in future, right? They have to, to get the better returns. So what mechanism need to be adopted, right? So the asset had to be acquired, right? You would have known about Insolvency and Bankruptcy Code, IBC, right? If the asset becomes non-performing, that should be identified immediately. They should be identified immediately and redressed, right? That is what we say risk management. And then transparency or market discipline, right? Whatever the transactions, like for example, NBFC has taken loan from someone, that need to be made transparent, because investors must know, right, how this NBFC is operating. right, where the NBFC is invested. So these are the objectives behind regulations, right? So these keywords come handy for you, right? You may not remember the basic, the minor details of everything, but these keywords will give you more value for your mains answers, right? So what are the key regulatory requirements? What sort of obligations these regulations bring in? What sort of obligations? Very important, because for your mains answer, mains examination, they may ask about NBFC. NBFC has become a very important topic, right? Because we are talking about mobilizing more than 111 lakh crore rupees to realize the dream of Vikasit Bharat, right? So you must know this. So what are the area of regulations? For example, capital adequacy. They need to have proper capital. Higher minimum tier 1 capital for upper layer NBFCs. What is tier 1 capital? You might have heard this term, tier 1 capital, at many places, right? For example, Basel norms, when we discuss Basel norms. So what is tier 1 capital? So in simple words, tier 1 capital is core money of the bank. Core money means what? For example, so this money can be used to absorb the shocks. What is core money? Core money does not include the deposits. For example, let's say core money, what does it include? They include retained profit. For example, bank gets some 100 rupee profit, let's say. In that profit, they would have lent 80 rupees. 20 rupees they would have kept for themselves, right? That money is owned by the bank itself. The retained profit. Equities. Bank also owns some equities, right? So even that equities can be used to absorb the shocks. What is the meaning of shock? For example, situation of bank run. Bank run means what? Suddenly the customers start withdrawing the money, or so there is some big project has failed, right? So whatever the interest that you are getting from some big project which you have lent for, and the project has failed, that asset become non-performing. So these are big shocks, right? To absorb those shocks, the bank should have some money, core money, right? That money is called tier 1 capital. Understood? So this does not include deposit money. Deposit money cannot be the core money, right? For example, if I deposit something, tomorrow I'll go and ask the bank to give me the money. Right? That cannot be the money to absorb the shock, right? So tier 1 capital is the money which is core to the bank or any institution which can absorb the shocks, external shocks. That is called tier 1 money. So what is capital adequacy? So NBFCs has to maintain 9% of tier 1 capital. Overall capital, they have to maintain at least 9% of tier 1 capital. Got it? Governance. Every NBFC or upper layer NBFCs, I'm talking about upper layer NBFCs, they have to have mandatorily chief risk officer, chief compliance officer, independent board committees. My dear students, I don't want you to remember all these keywords, but you should know when you talk about governance reforms, what sort of reforms the bank can bring in, right? So what need to be done? Risk management need to be done. Board members need to be independent. They should not have any stake in the bank. They should not be influenced by the investors, or they should not be influenced by the borrowers. So board committee members should take the decisions independently. That is very important. These are basic things, but you should know it. Okay. Chief compliance officer, the officer which overlooks or take care of compliance mechanism, if the bank is complying to the regulations or not. Okay. Disclosure norms. They have to disclose their profit, their revenue, their risks, right? Concentration exposure. So there need to be a cap. For example, let's say one person or one influential businessman comes to the bank, right? He puts a proposal to borrow, let's say 10,000 crore rupees or 30,000 crore rupees, some big money, right? So that poses a risk to the bank. Right? If that project fails, what happens? Right? There needs to be a cap. What is the maximum limit the bank can lend to a person? That limit to be imposed. That is what we say, concentration exposure. For example, the bank should not be exposed too much. So there is a saying, right? Do not put all the eggs in one basket. Similarly, the bank should not be exposed to the risk. So how can we control it? By capping the money that to be lent for a businessman or a person. So capping on lending to single borrowers or groups. So the borrowing can be done by a group or borrowing can be done by a single person. There needs to be a cap on the borrowing. Liquidity management. Mandatory liquidity coverage ratio for NBFCs, large NBFCs, liquidity coverage ratio. Okay, so what is this liquidity coverage ratio? Again, they may ask because NBFC is in the news. So I will tell the formula. It is stocks in high quality liquid assets divided by expected cash outflow in next 30 days. 30 days into 100. Right? This is called liquidity coverage ratio. So, stocks in high quality liquid assets. High quality means, so liquid assets means stocks. They can even possess the gold. They can even have the money in the government securities. Government securities, high quality assets. Government securities. So these assets which can be liquidated soon and which is of high quality. High quality means they don't have any risk. Right? They don't have a risk of failing. Right? For example, if I lend the money to someone, right, who is running a risky business, that is not a quality asset. Right? So how much the high quality liquid assets the bank possesses divided by expected cash outflow for next 30 days. So next 30 days, bank have to lend for someone, bank have to give back their deposits, bank have to run for their operational, bank have to spend for their operational things. So next 30 days, and then they also analyze the risks. So in next 30 days, if the interest that is getting paid by the assets or the borrowers, if that fails, they analyze all the risks. For next 30 days, how much money is going to go out from NBFC? So they calculate that. In the denominator, they'll put it. In the numerator, they'll put as high quality liquid. This is owned by the bank. That is called liquidity coverage ratio. For NBFC, upper layer NBFC, it should be maintained as 100%. 100%. Right? High quality liquidity assets must be 100% equal to the cash outflow for next 30 days. That's called liquidity coverage ratio. Okay. So that's about LCR. They may ask LCR because, UPSC is going deeper. They're not limiting themselves to the basic concepts. They're going deeper. Right? So you may expect this liquidity coverage ratio. Okay. And there need to be a internal audit mechanism. A strict internal audit mechanism. Right? So these are the obligations that are brought in to regulate the upper layer NBFCs. Okay. So next we'll move on to prepaid payment instruments, PPIs. Prepaid payment instruments can be a very, very important question for the prelims. And I don't expect this in the mains, but you need to quote these as examples. You need to quote these as examples with respect to digital economy, right? With respect to cashless economy, with respect to credit mobilization, with respect to fintech solutions. So for all this, PPI can become a very good example. What is prepaid payment instruments? I'll give an example. Let's say Amazon Pay, right? So for example, if someone gives you a gift voucher, there is a mechanism to buy a gift voucher in Amazon, right? For example, if there is a friend's wedding is happening, right? You don't know what to gift him or her. So what will you do? Go to Amazon, buy a gift voucher, 1,000 rupees, 5,000 rupees, etc. So the gift voucher will be having a code. That code will be sent to the person's email, right? So the person can use that code and add the money to his wallet. That is called Amazon Pay wallet. Amazon Pay wallet. So Amazon Pay wallet will have some money. There is not bank. That is not a bank. That money will not be there in your bank account, but it will be there in your Amazon Pay wallet. Right? You can utilize that money for your Amazon purchases, whatever it is. Right? So earlier, that Amazon Pay wallet money can be used only for the transactions happens in the Amazon, e-commerce website. Earlier, Amazon Pay wallet money could be used only for buying things from Amazon website. Similarly, your Paytm wallet. But now or recently, that is in the beginning of this year, January, RBI has introduced UPI mechanism even for your PPS. Means what? So you have UPI ID for your accounts, right? A phone number will be linked to a bank, right? So that the bank UPI, the bank will have its UPI ID, right? Though the people can send money through phone number or people can send money through UPI IDs. So earlier only the bank accounts used to have UPI IDs. Now even this prepaid payment infrastructure, even this prepaid payment instruments will have UPI IDs. So your Amazon wallet can have UPI ID, right? So that means what? The Amazon wallet money can be used for other purposes also. That means outside the Amazon ecosystem. Just like you use money from the bank. Are you getting it? Amazon wallet, which stores the money, is called prepaid payment instrument. Prepaid payment instruments. That means you prepaid means you have already earned the money. That money need to be utilized, that's all. Right? So earlier that money used to be, used or could be used only in their, respective ecosystem. Amazon money in the Amazon infrastructure, Amazon website, Paytm money only for the transaction in the Paytm. But RBI has introduced UPI ID for those PPIs. Right? You can directly credit the money into Amazon wallet by using Amazon UPI ID. Also, you can utilize the Amazon wallet money to other purposes. Not only for their own e-commerce website. So that is the reform RBI has introduced. So PPI can be a question. What is PPI? Right? So they can be non-banks or banks. Right? So RBI allowed PPI wallet to be linked with UPI. Right? So users can now make UPI payments using their PPI balance instead of a bank account. So there is no need of a bank account. You can just open Amazon wallet, add money into it, give the UPI ID. You would have seen many auto drivers already using the UPI ID linked to the Amazon wallet, right? And it is enabled to third-party application providers. Third-party application providers are like PhonePe, Google Pay, Paytm, right? Even Amazon Pay. So these third-party application providers connect this wallet through their UPI IDs. Got it? Right. So definition: PPIs are any digital or a physical instrument that stores preloaded money value, which you can later use to make payments or transfer funds. Okay. So they are digital substitutes for cash, right? So again, you can use these terms. So what is the maximum money that can be stored in the wallet? 2 lakh, right? So what are the modes the money can be transacted? UPI, card, etc., debit cards, etc. They are non-banks, right? You can use the money for any purchase, right? So what are types of PPIs? Small PPI and full KYC PPIs may not be so important, but you should know the divisions, right? Issued for obtaining minimum details of holder, right? So the small PPIs do not ask you to complete the KYC norms. Just phone number with OTP is good enough, but the limit for them is only 10,000 rupees per month. Small PPIs. So full KYC PPIs, they have to have full KYC. Customers need to fulfill the KYC norms and they can have maximum of 2 lakh balance. So who are the issuer of PPIs? Banks can issue the PPI as well as non-banks also issue the PPIs. So you cannot say that only non-banks are allowed. Banks are also allowed to issue the PPIs. Okay. So why is this important? Again, these are mains related question. So remember the keywords: enhanced interoperability. Interoperability means what? Amazon wallet was earlier used to buy only goods from Amazon website. Paytm money only for buying goods or paying money through Paytm wallet. But there was no interoperability, right, between the wallets, between different PPIs or between bank and PPI, right? So through this UPI linkage, interoperability will be possible. Financial inclusion. So the generic term, right? Even those who do not have banking access, without having a bank account also, these wallets can help you to store the money and spend it, right? Boost to digital payments, digital economy, cashless transactions, level playing field. That means wallets also can transact just like banks, right? Level playing field. Wallets also can operate with each other, right? It enhanced their potential to provide them a level playing field in the digital financial ecosystem. So these are the keywords. So remember the keywords, guys. Keywords are very important to enhance your quality of your mains answer writing. Okay. Next, we'll move on to, see, these are the reforms I'm talking about in the financial sector to mobilize the investment and to enhance the credit availability. That is very, very important, right? Especially for 2047 Vikasit Bharat Dream. Without creating a robust and efficient investment and credit mechanism, we cannot mobilize the money required to build infrastructural projects, required to increase the social capital. You know, social capital, schools, colleges, all those things, right? That is very important. There are investors, there is a need. How to bring them together, right? So there is a huge work being done to improve the investment and credit mobility system. That is why I'm discussing all this. These are very important. These are mostly neglected topics, or these are used only for the prelims perspective, but analysis is very, very important. Central government has introduced incentive scheme for low value BHIM UPI transactions 24-25. Means what? For example, let's say you would have seen, even small street vendor also will keep the UPI. So you pay smaller amounts, even 5 rupee, 2 rupee, 1 rupee, 10 rupees also through UPI. Guys, the UPI mechanism needs to have certain infrastructure. Bank has to pay for the infrastructure. There is a digital infrastructure, there is a physical infrastructure. All these things need to be paid. How can you expect banks to provide these services freely? When you pay through UPI, if you pay 5 rupees, the 5 rupees goes to the vendor, right? Banks do not deduct any money, right? So how can you expect the bank to make profit? Especially for the smaller payments. What happens with the card payments? Card payments, there is something called, merchant discount rate, MDR. That means what? Some percentage of your money will be deducted and will be taken by the bank. That is why when you use the card, your merchant says, add some 200 rupees extra because that money will be deducted, right? Have you experienced it? That is why shopkeepers do not encourage card payments, because some percent of money will go to the banks. But it is not in the case of UPI. UPI especially is meant for smaller payments, right? So how the banks can be profited? That is why, to promote more and more UPI transactions and to reduce the risk of loss, to reduce the operational burden on the banks due to this low value UPI transactions, central government has introduced an incentive to the banks. This incentive is not for customer. This incentive is not even for business person. This is for banks, because banks are giving services for less or low value UPI transactions without taking any money, right? Objective: promote digital payments among small merchants, right? So what was the target? Target was to achieve 20,000 crore UPI transactions. I am not talking about value, I'm talking about volume. How many? Right? Because low value UPI transactions cannot fetch more value. I mean to say, you cannot dream about like 20 lakh crore, 30 lakh crore, because they are smaller value. But we should look for volume. How many such transactions are happening? Right? So it was aimed to achieve 20,000 crore UPI transactions. But in 24-25, but we already have the data. In 24-25, this data is very, very important, right? How UPI is becoming the game changer. It can be a mains question easily, right? So UPI has achieved in the year financial year 24-25, UPI transactions have achieved 18,580 crore transactions. I'm not talking about money. I am talking about number of transactions, right? Target was 20,000, but we could achieve only 18,580 crore. But it is huge. It is huge, guys. I will talk about the data later again. Total value is 261 lakh crore rupees. Can you imagine? 261 lakh crore rupees have been transacted through UPI. That is the kind of revolution UPI is bringing in digital economy, right? So UPI's volume growth, right? Volume. See, look at this data very carefully. UPI's volume growth is significantly higher than its value growth. What does it say? Small payments or small value payments have been increasing rapidly. Right? Small businesses, small vendors, they have been attracted to use more and more UPI transactions. It will help to bring them into formal economy or formalize the economy. Very, very important. Volume is increasing, right, compared to the value. That means small businesses have started to adopt to the UPI at a rapid pace. That's a very important or very crucial data. We are talking about formalizing our economy. We are talking about structural reforms in our economy, structural reforms, formalizing, going to the cashless economy, etc. So this data is very important. UPI volume growth is increasing rapidly compared to the value growth. What is the volume growth? 41.7% compared to the last year. Compared to 23-24, 24-25 has seen 41.7% of UPI volume growth. And the value growth is increased by 30.3%. So the decimal points you can avoid. Just remember the round figures, like 40% and 30%. That's good enough. Okay. Encourage adoption of BEAM UPI transactions. Enable small merchants to access credit, right, by building digital transaction history. Right. So what does this mean? So small businesses, they transact digitally through UPI. Right. If I am a bank, I want to give loans to some small businessman. I want to understand how his business is doing. I want to understand what is the annual turnover or monthly turnover. So how can I look at it? Earlier, there was no way because he's an informal businessman or informal vendor. The money transaction is to happen through cash. But now, once they go digital, I can look at his transaction history. I can assess the transaction history. Then I can decide whether the money to be lent or not. Understanding? So this will help to increase the credit access for the small businessman. There are so many apps have come, my dear students. There are so many apps to get the quick loan. Right? For example, Slice is one such. Right? So if you enter your PAN card number, give your bank number, they will go through your credit score, they will go through your transactions, they will go through your revenue, intake, income and outgoing. All those things they will assess and they will decide. That is why going to the digital economy, moving to the formal economy is very important to increase the probability of getting the loan. Right? So that is very important objective. These are very important objective. These objectives can be done or can be used to in any generic question. For example, if you talk about online transactions, or if you talk about generally, forget about UPI. Generally, if you discuss digital economy, these objectives are very, very important. Okay. So what is the coverage? Person to merchant to transactions. It is not merchant to merchant. It is person to merchant. That is retail. Okay. Retail transactions. Okay. Applicable to the value, the transaction value of less than 2,000 rupees. Right? And how much money the government has kept? Nearly 1,500 crore. Second, not so important, but you should know the value of transaction is less than or equal to 2,000 rupees. Okay. So what is the incentive? If 100 rupees have been transacted, right, the bank will get 0.15 paisa. Right. So this much of money will be given as incentive to the bank. Both the money, both the banks, the bank where the money is been deducted and the bank where the money is been the bank where the money is been deducted and the bank where the money is been credited. Both the banks will get it. How much? 0.15 paisa for 100 rupees. That means 0.15%. Got it? Again, that's not a big burden for the government, but the thing is, it will promote the banks to adopt UPI and it will help promote the merchants to adopt UPI. Because tomorrow, if the banks become burdened, banks may start charging the merchants, right? Banks may start charging the merchants. So that will discourage the small merchants from using UPI. So for that sake, government is supporting the banks so that the banks do not start charging the merchants. If they charge merchants, merchants will charge the persons. Got it? So to take away the burden, government is giving incentives to the banks. Okay. What is the primary idea? Ensures zero cost acceptance for small merchants. Merchants should not be burdened. Right? They should be encouraged to adopt UPI. Okay. It will also promote or it will also support innovative UPIs. UPI 123 Pay, this? No, it can be a prelims question. What is UPI 123 Pay? It's a UPI mechanism where it can be done through feature phones. Feature phones UPI. And there is something called UPI Lite. Have you installed UPI? Have you activated UPI Lite in your app? Activate it. It will help you even if the network is low. Even if the network is low, right? UPI transaction happens in few seconds. For smaller money, not for bigger money, for smaller money, UPI Lite is a best feature. Okay. So this is for offline small way transactions in areas where there is the internet is poor. So this new PPI linked to the UPI also supports these features. Understood? So know more about this UPI 123 Pay and UPI Lite. That can be a prelims question easily. Next, we'll move on to RBI's biannual report regarding payment systems. RBI releases reports once in every 2 years regarding payment systems. How payment systems are performing. Right. So, again, prelims question can be like, that, right? So, RBI, what is the frequency of report? It's a biannual report or semi-annual report or annual report. Okay, this can be a prelims question, but I don't expect it. But I have put this data for you to include in your mains answer writing. Right? I don't expect this to happen I don't expect this topic as important for prelims, but for mains it is very good. But for mains it is very important. Okay. So understand this. In 2013, there are 222 crore transactions worth of 772 lakh crore in 2013. So 772 lakh crore. See, these are digital payments. So digital payments does not necessarily mean UPI. There can be RTGS, it can be NEFT, it can be cards. In 2013, there is not much about UPI. Right. So in 2013, this is the volume of transactions. But later on, you can say in 1 decade, the digital transactions have grown 94 times. In 1 decade itself, this is very crucial data. How are we growing with respect to our digital economy? 95 times growth has happened. And in terms of volume means what? Many people, it talks about people, businesses, people, they have been adopting the digital payments or digital transactions in a large scale. Right? In a war mode, you can say in a war mode, right? Volume has grown by 3.5 times. Very important data, right? So that is how we are able to revolutionize our digital economy. Okay. So in the digital economy, who is dominating? UPI is dominating. Right? So volume growth in last 5 years has been more than 74%. Value growth in last 5 years has been more than 68%. This data is very crucial. How UPI is revolutionizing the digital economy. Very important. UPI now leads India's digital payment ecosystem. More than NEFT or NEFT, more than RTGS, more than card payments, it is UPI that is leading the digital ecosystem. So when you talk about card payments, look at this, very important. Credit cards have more than doubled in last 5 years. Credit cards have more than doubled in last 5 years. That tells you how consumers are able to access the credit. Got it? So the debit cards are largely stable, not much about it. So that's about your UPI. There is one more important topic regarding UPI that is called Project Nexus. Very important. Project Nexus. So when we talk about CBDC, right, central bank, digital currency, we talked about seamless cross-border transactions, right? In the similar way, Project Nexus has been conceptualized to provide a platform or technological platform for seamless transactions across the borders. Are you getting it? It is not digital currency, it's a normal money itself. Okay. So we have UPI, maybe ASEAN countries like Philippines, Malaysia, etc. They would also be having their own UPI mechanism. But are they compatible with each other? To bring in this compatibility, there need to be a platform, right, which adopts to the UPI networks of different countries. That is what we call it Project Nexus. Who brought it? It is the initiative of BIS, Bank for International Settlement. You should know more about this. They ask in prelims. It works under IMF. Got it? So it is initiative of BIS to bring in the common platform, right, for interoperability between different countries, right? So currently, ASEAN countries are coming together through this Project Nexus. Malaysia, Philippines, Singapore, Thailand, they have been already part of this. Now, India is also has joined Project Nexus. Very important. It's a global platform, but currently ASEAN countries are bringing together, right, to utilize this platform for seamless transactions. Project Nexus, initiative of BIS. ASEAN countries are part of it. India has also joined them. Who are already there? Malaysia, Philippines, Singapore, and Thailand. Right. So Project Nexus, the image taken from the BIS website itself. So what is Nexus? Keywords are important, my dear students. Multilateral payment scheme aims to achieve G20 targets. Forget that. Aims to achieve what? Enabling cheaper, faster, more transparent, accessible cross-border payments. Focus these keywords: cheaper, faster, transparent, accessible. These keywords enriches your mains answer writing, right? If the money has to be transacted, right? If the money has to be transacted or if the payment has to be made, that needs to be cheaper means what? Transaction cost need to be very less. Faster. There should not be any delay. Today I am selling something, I am exporting something. I need money immediately because I have to pay for my rent, for my labors, etc. Delay in the money payment will increase my interest. It will create more interest burden on me, right? So, needs to be faster, needs to be more transparent. Government should be able to access data. Need to be accessible. Accessible means everyone should get it, not only big businessmen. So, look at this keyword: cheaper, faster, transparent, accessible. Cross-border payments. How does it work? It provides a comprehensive blueprint to standardize the way domestic instant payment system. Project Nexus provides instant payment system, right, for cross-border transactions. Okay. Communicate with each other. Its multilaterals in nature allows each IPS to make a single connection to the Nexus platform to reach all other IPS in network. So, an IPS UPI has to make one connection. I mean, they have to just adopt this network. They will be connected to every person who is connected to this Nexus. Earlier, what used to happen? Indian UPI has to connect with Philippines digital system separately and Malaysia separately, Singapore separately. But now everyone is connected to the network. So whoever comes and joins the network will get access to other digital system of different countries. Okay. Who is involved? So it is a collaborative effort between BIS, IH means Innovation Hub, BIS Innovation Hub, and interested central banks, and IPS that has been developed and refined over 3 phases of work. Don't have to remember that, right? So it will support coalition of countries interested to implement Nexus in the real world and to use it to connect their domestic IPS. So domestic instant payment systems need to be connected to the Nexus platform to have cross-border payments, to have seamless cross-border payments, which is cheaper, faster, transparent, and accessible. That's about Project Nexus, right? So, Digital Payment Index by RBI report, we have discussed in the previous video. That's also very important. How digital payment mechanism or network or system is revolutionizing. That report is very important to discuss answers regarding digital economy. If you haven't watched, go back to the previous video and watch them, right? That's a very crucial report. Now, we'll move on to credit and lending reforms in India. Right. So under this heading, we discuss various topics which are pertaining to credit and lending reforms. Okay. So very importantly, there is mutual credit guarantee scheme for MSMEs have been introduced. Micro, small, medium enterprises. So these are small businesses, right? If they have to get loan, they will not have proper collateral or proper security or proper guarantee. So it is most likely that the loan application will be rejected from the banks. So who will give them guarantee, right? Who will support them to provide the guarantee? So government has come forward through the scheme, mutual credit guarantee scheme. Under this, the credit guarantee will be given to the MSMEs, right? How and who does it? It is announced in the budget 24-25. Objective is strengthen the credit flow to MSME sector and reduce the risk for banks or NBFCs. Okay. Key feature, guarantee coverage of credit up to 60% by NCGTC, National Credit Guarantee Trustee Company. National Credit Guarantee Trustee Company under the Department of Financial Services Ministry, Financial Ministry, would provide credit guarantee up to 60%. Right? For whom? Those who have valid Udyam registration. There is a Udyam portal. Every businessman, small businessman, even a street vendor, right? They have to register their business in the Udyam portal. Okay. They should not have been classified as NPS. The loan should not have been classified as NPA. So they cannot provide guarantee for NPS. 75% of the project cost must be for equipment and machinery. So you cannot say that, give me a 10,000 rupees, give me 10 lakh loan. I am the CEO, I'll take 5 lakh rupee salary, rest I will invest in the business. 75% of the money need to be invested for equipments. That is the condition. These condition can be asked in your prelims. Yes. Can be a potential question. Okay. So what is duration? 4 years. Government will provide this support for next 4 years. 24-25, 24-26, 26-27 and 27-28-29. Okay. Or up to the loan of value 7 lakh crore. Either of this. If 7 lakh crore loan has been given with the credit guarantee, then the scheme is going to be, it is called sunset clause, sunset clause. Sunset clause, when the provision is going to end, right? So this is the provisional, this is where the provision is going to end, after 4 years or after achieving credit guarantee for 7 lakh crore rupee loan. Loan terms, so again, this is not so important. For less than 50 crore, repayment up to 8 years and 2 year of moratorium. 2 year moratorium means I taken a loan for business. From next year itself, my business will not start making profits, right? So I need to be given some time. That is called moratorium. Okay. So for 50 crore and above, longer repayment schedules are allowed. For less than 50 crore, the loan need to be repaid within 8 years. There should be longer repayment period must be allowed. Okay. So it supports capital intensive MSMEs. Why do they say so? Because 75% of the loan need to be invested in the machinery, right? It will support capital intensive MSME. For example, let's say if a company is making agarbatti, there you need more labor than machines. Got it? So those kind of MSMEs will not be benefited. Those MSMEs which are capital intensive, right? And next, credit sector reform is reform in the PSL. That is called priority sector lending. So ultimate aim of our governance is social justice and welfare of all, inclusive growth, equitable distribution of wealth. All that is aimed through PSL, priority sector lending. Right? Banks are mandated to give 40% of loans to the priority sectors. Right? Rest 60% they can give it to anybody. Which are priority sectors? Agriculture, and then education, energy, right, and small businesses and weaker sections. All these are priority sectors. Also, exports are also included. Right. So, certain percentage, for example, like for agriculture, they have to lend 18%. Even that in 80%, 10% should be given to small and marginal farmers. Right. So, this is the mandatory percentage of loan or credit need to be given for priority sector. It's called PSL. Right. So, scheduled commercial banks, cooperative banks, and then regional rural banks, small financial banks, all of them need to be adhered to PSL norms individually. Got it? So now there have been certain reforms in the PSL norms. Okay. So you can see this pie chart. Okay. I'll maximize a little bit. 18% for agriculture, 7.5 for micro enterprises, 12% for weaker sections, and then housing 5%, education 2%, renewable energy 3%. And rest of the loan should be others. And rest of the loan should be for social infrastructure, export credit, etc. Right. So how do you read this pie chart? It is not like, say for example, if the bank is lending 100 rupees, 40 rupees, the 40 rupees should be lent in this percentage. Understanding? 18% of this 40 rupees. 7.5% of this 40 rupees. Are you getting it? It is not, this pie chart does not signify total money of the bank or total credit of the bank. This pie chart signifies total PSL credit. 40 rupees have to be lent for these sectors. Understanding? Okay. So that's about PSL basics. What are the norms? What are the changes in the PSL norms? We'll discuss that. Revisions. Enhanced loan limits. Loan limits means loan limit per person. Enhanced loan limits for education loan, including occasional courses. Right, for educational loan, up to 25 lakh is been allowed per person. Right, for example, if you want to go abroad, do some masters, right? So again, for those purposes, education loan can be enhanced, or it has been enhanced per person from 20 lakh to 25 lakh to promote higher education. These points are very important to write educational reforms as well. Higher education or secondary and tertiary. We are lagging behind in secondary and tertiary education. But gross enrollment ratio for primary education 100%, nearly 100%. But primary, secondary and tertiary education is lagging behind, especially for women. So our social mindset is such that they don't like to spend more for women education as they spend for men. So this can be a help for them. Social infrastructure. If the loan is taken to build a school or drainage or water facility, right? So to build a check dam or whatever, up to 15 crore it has been allowed, right? The loan has been enhanced. Earlier it was 10 crore. Got it? For weaker sections, who are the weaker sections? Right? Farmers, artisans, distressed borrowers, etc. Now transgenders are also included. Very, very important. These points you should use your society answers also. How government is considering their issues. Mostly they have been neglected for ages, transgenders. Right? Now the government is becoming more and more gender sensitive. Right? They're also including transgenders in their social welfare schemes. Example, in the weaker section category for priority sector lending, transgenders are also included. Society answer. Okay, economy is an umbrella. Everything comes under that. Right? Artha Shastra, Artha is prime. Without money, nothing happens. Economy covers all history, geography, environment, art and culture, everything, social justice. Everything has to come under economy. If there is no money, nothing moves. Money is the energy. That is why. So you can use this economy points to other topics as well. MSMEs continue as a PSL category. Again, it's not a new norm. Okay. Institution-specific changes, very important. Earlier, small finance banks. What is small finance bank? Comment below if you want to know. If you want me to explain, also comment below. I'll make a video for this. Small finance banks, earlier the norm for PSL was 75%. Now the norm has been decreased to 60%. Annual net bank credit, ANBC, annual net bank credit, right? Total credit, in the total credit, earlier 75% need to be given for PSL. Now it's been reduced. Because to give more freedom, right? They have to keep 40%. Within 60%, they have to keep 40% for core PSL sectors. 60% is PSL. In that, 40% need to be kept for core PSL sectors, micro enterprise and agriculture. And 20% can be flexibly allocated. There are no restrictions, flexibly allocated. Okay. Next, urban cooperative banks. Earlier the norm was 65%. Now it is been raised to 75%. Can be a prelims question easily. Okay. So new norms for PSL lending. Got it? So earlier, the previous point was education sector. Individual limits have been increased. And social infrastructure limit was increased. And under the weaker sections, transgender is also included. And now, PSL norms for small finance banks has been reduced. And for urban cooperative banks, it's been increased. Understanding? Right. Right. Why UCB, urban cooperative banks limit was increased? Because to refocus towards small borrowers in urban and semi-urban India. Who are small borrowers? Especially street vendors, small businesses, right? And those who want to have an affordable housing. See, this point you can include reforms with respect to gig sector, gig workers. For example, if I have to become a Zomato delivery boy, I need to have a bike. Where is the money? Right? I can borrow through urban cooperative banks. I'm a small borrower. PSL sector norms help me, right? Because the coverage has been increased. So urban cooperative banks will be lending for small borrowers like me. Or a street vendor, they have to buy fruits, vegetables in the morning. They have to sell it in the evening and pay back the money. See, these small borrowers will be supported by increasing the PSL limit for urban cooperative banks. Are you getting? Okay. So next, PSL norms being recalibrated to balance. Look at this. Balance inclusion with institutional sustainability. These are the keywords. What PSL would achieve? PSL achieves inclusion, inclusive growth. Got it? And sustainability. You cannot include everyone and make the system unsustainable. Just like giving free money to everybody. It won't work like that. You should also think about health of the financial system as well as growth of the weaker sections. Both have been taken care by introducing PSL norms. Are you getting it? Next, microfinance sector. What is microfinancing? Less value, short term, sometimes no collateral, right? So, and women self-help groups, right? So it is again outside formal banking network. Microfinance sector is outside formal banking network. Microfinancing, right? So it also includes informal micro financiers, right? Your local private financiers, right? They are also part of microfinancing. Okay. So microfinancing refers to providing very small loans and financial services like savings, insurance, remittances. Savings is also microfinance. Your chit funds, right? To the poor and low income households who lack access to traditional banking. It's about microfinance. Significance. How are they significant? Very important data. See, credit mobility is a big topic. We have to mobilize investments and savings to improve the credit availability for infrastructural growth. Got it? That is why credit mobility is an important topic. Under that, microfinance is a very important topic. Microfinance is also important for social sector development. I will tell you how. Okay, so it has led to the financial inclusion, right, of 140 million families in the year financial year 24. It is the data up to the year financial 24, right? Poverty alleviation. MFI plays a very important in poverty alleviation. 46% loans go to the households which are having earning of less than 20,000. Got it? It also led to the women empowerment. 88% of SHGs are women-led. Self-help groups, they're women-led. Right? Very famous Seva Bank of Gujarat. It is totally women-led initiative, right? India's first microfinance institution established in 1974 in Gujarat, completed 50 years. Right? Seva is a very important microfinance institution, especially focusing on women empowerment. Right? So it can be a question. Self-help groups can be a very important question. That is a very dearest topic for UPSC mains. Okay. So you can talk about Seva Bank, Shri Mahila Seva Sahakari Bank. In short, Seva Bank. It is self-employed women's association. So how does it work? All the women who are self-employed, they can be street vendors, they can be housemates, they can be running a small business, etc. All of them, they mobilize their savings or they pool their savings in this bank. Got it? In turn, they will get interest as well as they will also get credit. Right? That is how it is empowering the women. They are making them self-employed. They are supporting women-led businesses, women-led SHGs. Right? So Seva has touched the lives of nearly 25 lakh women across India, around 18 states. So that's how big it is. It's a revolutionary initiative. It's a microfinance institution. It has already reached its 50 years of celebration. So it is celebrating its 50 years successful journey. It can be, you can give it as an example for SHGs. And SHG question can be a very important topic for the mains examination. Also, they can even ask Seva. What is Seva in your prelims? Okay. So largest microfinance program is very important. NABARD SHG Bank Linkage Program, BLP. NABARD SHG Bank Linkage Program. It is introduced in 1992 itself, world's largest microfinance program. Okay. It is serving 12 million SHGs formed of 120 million women. So NABARD does not directly finance the women. It finances the banks. NABARD finances the banks or such urban cooperatives or cooperative banks, small finance banks, regional rural banks, etc. Those banks, in turn, they will give credit to SHGs. Okay. NABARD is kind of indirectly supporting financial mobilization, credit mobilization to the SHGs. NABARD SHG Bank Linkage Program. Very, very important. Okay. It's a revolutionary financial sector scheme to promote women empowerment, women self-employment, especially in the rural areas. Okay. So it has touched life of 120 million women. Okay. So what are the challenges in the microfinance sector? Over indebtedness. 8 to 10% of the total MFI loan book belongs to borrowers who have already been loans from more than 4 different lenders. This borrower has taken money from different people already. Okay, there's lender 1, lender 2, lender 3. He has defaulted for all of them. Again, he is approaching the bank to get the money. Such kind of people are nearly 8 to 10%. Because it is very difficult to verify them. They have no digital footprint. All those business they are doing offline. I'm a street vendor. I've taken money, cash from different lenders. I am not returning money for them. I am again approaching one lender. That guy does not have any means to verify my credit score. Right? That means how prompt or honest I am in repaying my money. That is one challenge. High interest rates. Microfinance sector. If you go and approach a private money lender, right, he will charge hefty interest rate, right? Baddi, chakra baddi. It makes repayment very difficult. Rising NPS, nearly 55,000 crore loans have become PAR. Means portfolio at risk loans. Right? You can say NPA. It's a different term for NPA, that's all. Right? And next is coercive recovery practices. If you don't pay the loan, they will send gundas. Okay? They'll bring you, they'll do social media campaigns against you, defame you socially or publicly. Right? So these are the challenges in MFI. Way forward, we have to regulate the PSL plus co-lending model. We have to regulate PSL and co-lending model. Co-lending means NBFCs and banks together. Okay. To deepen the reach, we have to deepen the reach. Tech integration, we have to include AML. See, for way forward, almost all every question, okay, you can include this AML integration. It is very much necessary. Right? It provides you for informed decision making. Informed decision making, that is very important. Informed policy making, very important. You need to have a right information to devise a right policy. How will you get the right information? Right? AML will help you. Right? It will do big data analysis. It will help us to understand the trends, where to give the money, right? How to invest, how much to invest. All that is need to be done. And we should promote more and more schemes like PN Mudra, which will give you up to 20 lakh loan for small businesses without any collateral. So that will deepen the reach and it will make more rationalize. It will rationalize the MFI sector. Okay. So it remains critical for women empowerment and rural credit, but requires stronger regulation and tech-driven monitoring. These can be your conclusions, guys. Right? You should write these kind of crisp and very generic and simple conclusion. So this is not so technical. Can you see? It's a very simple, apt, up to the point, not beating around the bush, but it is qualitative. Write such kind of conclusions. Okay. Next, we'll move on to last one regarding credit sector. Okay. Digital footprint based lending for MSMEs. What is digital footprint? Whatever the digital transactions you have been made, right? Debit, credit, investment, loan, etc. Okay. All that can be analyzed and assessed. Okay. To understand whether are you eligible to get the loan or not. Okay. Or how much can be lent for you. For what duration. How your business is doing. Right. Where and all you have made your investments. Right. Where and all you have taken the credit. How promptly you have repaid the credit. All that can be checked through digital footprints if you have done transactions digitally. So, objective to move beyond traditional credit score. Traditional credit score means all CRISIL will give you, or a private third parties will give the credit scores. It's a move beyond that by leveraging digital ecosystem data. Leveraging means more utilizing it more, increasing its utilization. Leverage means increasing its utilization, right? So what are the key features? There is a new model has been built, or a new model will be built. Automated loan appraisal using digital footprints. Automated loan appraisal. Okay, the government is building new model. Who is building? Public sector banks. So they're building a new model to understand how is the person or a business doing by going through their digital ecosystem data or digital footprints for automated loan appraisals. To get a loan is very difficult. So you should bring the people for surety, right? If you don't pay the loan, they have to pay. Okay, you should bring in all the documents, property related, these and all. So it's a red tapeism, right? So digital footprint or digital economy is erasing the red tapeism. Red tapeism is delays, unwanted, unnecessary delays. Okay, introduced by government systems or bureaucrats. Okay, so that will make our economy inefficient. So this digital economy, right, through these systems like automated loan appraisal models, it will reduce the delay. It will make our credit ecosystem more efficient, and it will help the honest businessmen who are working hard to promote their business. Okay, so PSBs are directed to build in-house digital credit assessment capacity. In-house, right? They don't have to depend on third party like CRISIL or etc. They will be building in-house mechanism. They will check your UPI transactions, e-commerce trails, GST invoices, digital payment history. For all going through all these, they will understand how capable are you to repay the loan and how much loan can be lent to the person. So in the budget 2025, there is something called Grameen Credit Score has been introduced. Grameen Credit Score 25. That means for financial year 26. Grameen Credit Score has been introduced. What is that? For rural women entrepreneurs. It tracks repayment, SSG transactions, business activity, formalizes informal SSG economy into central credit system. Right? Grameen Credit Score. Right? To help formalize the credit ecosystem for women, especially rural women. Right? So it will track all their transactions, business activities, SSG activities. Right? By going through all the data, see, all that is AML, big data analysis. So all this technology is helping the governance to become more efficient, and it also helping the financial system to reach the grassroots levels, right? So Grameen Credit Score, right? Very important. You can quote this as examples. It will make your answer look more relevant and new. Okay, instead of writing the good old content from standard or old notes like some toppers notes, etc. So use these new examples to make your answer look more relevant and unique. Okay, it also ties with UPI incentive scheme, just like UPI incentive, like we discussed in the earlier topic, BEAM UPI incentive scheme for banks. It reduces dependence on traditional collateral based lending. Okay, traditional collateral based lending means you have to, even though business is doing well, you should manage to get collateral to get the loan, right? But by looking at your business activity, banks can trust you, so it can reduce the collateral burden. Got it? So it will help the banks to assess your business more efficiently, so that the collateral burden is reduced. Okay, so that's about credit system reforms, recent reforms. They're very, very important. Credit system is a very important topic. As I told you earlier, Vikasit Bharat needs lot of investment and inclusion, innovation and efficiency. Right? That is why credit system is very important topic. Okay. Moving on. Government has introduced, central government has increased FDI limit in the insurance sector, foreign direct investment. So there are two kinds of foreign investment. One is FDI and FII, foreign institutional investment. So what is the difference? Let me know in the comment section. Again, if you want me to explain, I will make a video, but just let me know. Okay. So in the Union Budget 25-26, FDI limit has been increased in the insurance sector. How much? From 74% to the 100%. Automatic route. So what are the two routes FDI can come in? Automatic route and government approval route or approval route. Okay. So there is a key condition. The enhanced limit will be available exclusively for those companies which commit to invest the entire premium collected in India. Right? They have to invest in India. Whatever the premium they collect, they have to invest only in India. So they will be given with advantage of 100% FDI. That means what? Entire business can be owned by them. 100% FDI means what? If some foreign bank or foreign insurance company has to open its unit in India, earlier 26% of ownership should be given to Indian partner. 74% of ownership had to be retained by the original finance for foreign investor. But now with enhanced limit, entire company can be owned by foreign investor. Got it? That's about 100%. Remember this, Dinesh Khara Committee, very, very important. Dinesh Khara Committee, right? Again, it is set up by RDA, Insurance Regulatory Development Authority. Dinesh Khara Committee, right, is an economist. To review, is a banker, I'm sorry. To review key provisions of the Insurance Act of 1938 and assess the feasibility of 100% FDI in the sector. Right. So, Dinesh Khara Committee has submitted the report to IRDA. Based on that, government has been increasing the FDI limit from 74% to 100% in the insurance sector. Dinesh Khara Committee, insurance sector, FDI. Remember this, very important. Significance of 100% FDI. So, again, in general, if you allow foreign investment, what happens? Right? Higher investment, we can attract more and more foreign investors. Right? Enhanced competition. If foreign companies come in, right, more and more foreign companies come in, they will compete with each other. Similarly, Indian insurance companies also, they will innovate, right? They try to bring in more technological innovation, more efficiency, and more innovative products. It will help insurance sector to penetrate deeper to rural areas, informal areas, etc. To the rural areas, informal economy, etc. Next is enhanced competition. Means what? If you allow foreign investment to come in, right, more and more foreign companies come to India, right, they start competing with each other, right. Similarly, Indian insurance companies also, if they have to stay in race, they will also bring in more efficiency, innovation in terms of innovative products. They will also bring in more and more investment. Got it? So all these will revolutionize insurance sector, right? It will help insurance sector to penetrate into the grassroots level, rural areas, informal economy. So that will enhance the competition. One of the important competition is competitive pricing with less premium, more returns, etc. Technological advancements, I told you, right? It will bring in more technology. Foreign companies bring in advanced technology in the insurance sector, right? Improved penetration, I told you. So there's a target. Vikasit Bharat is targeting insurance for all by 2047. Okay. So these are very, very important terms, right? Whenever there is a question regarding insurance sector, write this. Insurance for all dream by 2047 needs deeper penetration of insurance, right? General insurance as well as other insurance also. Health insurance, vehicle insurance, right? General insurance is life insurance. Okay. So all kinds of insurance need to be penetrated to the rural areas. Why? Insurance provides social security. Got it? So that is the main reason. Addressing market gaps. This move seeks to address the issue of the absence of top global companies in India. 20 out of world's top 25 insurance firms are currently not operating in the country. Out of 25 top insurance firms in the world, only 5 are operating in India. So this will attract powerful or influential or big insurance companies to come and operate in India to revolutionize insurance sector. Okay. So so not only for insurance, these points can help you to address the significance or advantage of FDI in any sector. Very generic points. Okay. Legislative and regulatory reforms. So to bring in this FDI reform, so government has to amend certain laws. So it can be a prelims question, not so important. Again, what kind of laws? Which laws? Insurance Act of 1938, LIC Act of 1956 and IRDA Act of 1910. All these three should be amended. Okay. So these three acts mainly responsible for insurance sector in India. Okay. So what is the status and what are the challenges of India's insurance sector? Very important. Right. Very important points for any question regarding insurance sector or economic security. Think about these points. Okay. India is currently 10th largest insurance market. 10th largest insurance market globally and second largest among emerging markets. Right? Market means so many consumers or customers. Right? It is projected to reach $222 billion, $222 billion by 2026. So that's a huge market. Indian economy is a consumer-based economy or a demand-driven economy. This will attract more global participants. Okay, but the status is not so strong. For financial year 24, total premium growth 7.7%. So it is decent growth, right? Year-on-year growth from financial year, that is 2022, 2023 to 2023 to 2024, the growth that is achieved is 7.7%. It is decent growth. Insurance penetration. What is the meaning of insurance penetration? Total premium paid to the GDP. Very important concept for prelims. Very, very important. This keywords are very important when you talk about insurance sector. That can be a question. Okay. Just 3.7%. Down from 4% in the financial 23. Right? Premium to GDP. Right? Not a significant improvement there. Declined. It is declined. Insurance density. Per capita premium. Total premium divided by total population. Right? It is just $95. It is up from $92. Just for your information, if you compare insurance density of India to China, China's insurance density is 600 USD. Okay. And if you compare it to USA, it is around 8,200 USD. Can you see? That means Vikasit Bharat dream of 2047 needs to ensure insurance for all as well as growth in the premium as well. Okay, that means what? Just not life insurance. Insurance sector must penetrate other areas also. For example, crop insurance. Okay, as well as vehicle insurance. Okay, there are such other sectors where insurance sector can come in or pitch in, can influence or provide social security. Okay. Private sector share rose to 62.5% from 48.0%. That means it is increasing. So, private sector participation is improving in the insurance sector. Very crucial data, very important data. Okay, don't have to search anywhere else. Just note them down. Use in your answers regarding insurance sectors. Very important data. Okay, it is also better to compare with other economies. Emerging economies, China, and developed economies, USA. You can compare them. Then you can understand where are we standing and how much we need to grow further. Okay. So despite this growth, the sector faces several challenges. What are the challenges? This is status, and this is challenges. As I told you, low penetration, insurance penetration. That means premium to GDP. Okay. It is decline. Market concentration. That is, I told you, among 25 top global insurance companies, 20 are not there in India at all. Economic and cultural constraints, affordability issues. Right. We are still in an economy where people are earning to live, not to secure their life. Ensuring livelihood to fulfill their basic amenities is becoming difficult because of huge social expenditure for health, education. Right. Out-of-pocket expenditure for health, education is huge. Right. And even they cannot even afford, a secure housing also in the urban sector. So where do they get money to pay their premiums? Okay. So affordability is the biggest issue in the insurance sector in India. Restrict adoption, and many citizens prefer traditional financial practices over insurance. They invest in chit funds. So because that will give them some security, 5 years, 6 years, they can take the money whenever they want. Right? So they lack financial awareness, and they also lack the affordability. Right? And most of the economy is of informal in nature. So all these things combined, Indian insurance sector is not growing much. These are the challenges. Okay. And the last topic for the video, new draft rules for gold loans. Gold loans. So people when in the crisis times, they have to get the money, right? They cannot put land as a collateral, house as a collateral because it's short-term money. So they think they can repay back or repay within months or years. So what they will do? They will bring all the gold and they take the money. So there are certain issues in the gold loan sector. Right? Government has introduced certain guidelines. We'll discuss all of them. Why these regulations introduced? To regulate, to harmonize gold loan practices across banks and NBFCs. I have given this point for you to note down these keywords. Regulate and harmonize. Harmonize means there should be a standard. For example, if you go to a private person to take to get the loan by giving your gold, he can estimate the price like if the gold is, the value of the gold can be of 2 lakh or something. He can say, sir or madam, I can give only 20,000. There is no standard. Since you are in the crisis times, you will say yes, how much ever it's possible, you will just take it and go. Or you may charge hefty interest rate. So we need to harmonize those practices. Okay. Harmonizing and regulating. So focus on keywords, dear students. Okay, that will help you to write quality mains answers. Are you getting? I don't expect you to mug up entire sentence. Okay. Enhance borrower protection. Borrower need to be protected. I told you, right? So the value should be proper and the interest rate should be fair. Okay. Reduce risk of asset loss due to over leveraging. Over leveraging means, let's say, over interest rate. Okay. So you cannot repay back. You will lose the asset itself. Okay. So to regulate all these things, government has introduced certain norms. Okay. First norm is very important. This is in discussion. Gold loans are very much in discussion in the news. Remember this. Loans are permitted only against gold jewelry and bank issued coins. You can buy coins from the banks, or you can buy coins from the banks and put that as collateral if you have such coins. If you don't have such coins, you can put only gold jewelry as a collateral. Right? So that means what? You cannot bring some other gold bars or gold coins, any other solid gold. That is not allowed. Only jewelry or bank issued coins. Next. Primary gold items such as bars, ingots and bullion cannot be used as collateral. Okay. Second thing is loan to value cap. Loan to value ratio is capped at 75% of the assessed value gold. Means what? Let's say the value of the gold is 1 lakh rupees. Loan can be taken only for 75,000 rupees. That is the cap. Maximum. Not beyond that. Loan to value cap is 75%. Got it? Collateral valuation norms. Gold must be assessed by qualified personnel, not everyone. Qualified personnel must assess the value of the gold. Valuation must be based on 22 karat gold price. Lenders must use lower value between, again not so important. Just for example, if you tomorrow take the loan and take the gold and go to lender and take the loan, or if someone asks you, since you're prepared for UPSC, so tell me what is the new rules introduced in the gold loan so that I can be informed. So you should be knowing these things, but not for examination purpose, because I don't expect UPSC to ask all this, how collateral evaluation has been done. Okay, in general terms, I will say lenders must use the lower value between 13-day average gold price or the previous day's gold price. So to assess the value of the gold, they have to take 30-day average price or previous day. Among these, which is lower, they have to take it. Okay, that is how the loan should be evaluated against the collateral. Okay. Next, very important. Borrowers must declare ownership of the jewelry or furnish original purchase bills. If you're putting a jewelry as a collateral, you should provide ownership details also. You should have purchased bills, or you can even declare the ownership, maybe an affidavit. Declare the ownership of the gold, or you have to bring in original purchase bills. Right? Maximum limits is, if you're putting the gold jewelry, 1 kg of gold can be taken as collateral, maximum. Or if you're just giving the coins, 50 gram can be taken as collateral. That is the maximum limit. Are you getting it? Borrowers cannot take concurrent loans. Means what? You have already put gold somewhere and same gold you're putting as a collateral somewhere else. Right? You cannot take collateral loans. Okay. Purpose-based monitoring and repayment. Means what? Consumption loans must adhere to stricter tenure norms, normally typically a maximum of 12 months. Consumption loans means what? I am taking loan to pay my fee, or to pay my rent, or to pay my health expenditure. That is called consumption loans. That needs to be repaid with a maximum time of 12 months. Because they are risky loans. Right? You are putting the money to consume, not to invest and earn the profit. That's a risky loan. So cannot be given with longer schedule of repayment. That is why need to be paid within 12 months. Business purpose loans must be evaluated based on borrower's cash flow, not solely in the collateral value. Right? So the loans need to be evaluated also based on business cash flow. How much money is making? What is the revenue? What is the profit? Based on that also the loan value can be evaluated, and the term of repayment also can be evaluated. Okay. Renewal and repledge restrictions. Fresh loans are allowed only after full repayment. You cannot take a new loan without repayment of previous loans. On full repayment of the loan, lenders must retain the gold within 7 working days. You have repaid all the loan, but the person who is keeping the gold is delaying. Okay, he cannot delay. He must return all the gold within 7 working days, or he has to pay penalty, that is 5,000 per day. So these are repayment norms. Okay. Why these regulations have been introduced? Rising gold loan NPS. Right? Many people are taking the loan but not paying back. So nearly it is around 2,000 crore for banks and 4.5 thousand crores for NBFC. Again, no need to remember this. Just know that gold loans have been increased there is increasing NPS among gold loans. Regulatory gaps, there is no regulation. There is no proper systematic regulation for assessment of value, loan value, interest value, or payment duration time. Okay. Market growth pressure. Gold loan portfolio experienced over 100% year-on-year growth. It is increasing a lot. There are many gold loan companies are coming in. You must be seeing ads everywhere. There are many gold loan companies are coming, right? Because the gold loan is growing 100% year on year, right? Borrower protection. These are the rationale behind changes. Borrower need to be protected, right? Interest must be evaluated properly. Value of the collateral must be evaluated properly. Once the loan is paid back, the gold has to be returned on time. All these are protection measures for borrowers. So these are the rationale behind the new changes introduced in the gold loan. Implications for lenders: increased compliance. They have to comply. They should get a proper authorized person to assess the gold value. All right. They have to adhere to the previous day's gold value or 30-day average of the gold value. They cannot just arbitrarily declare the value of the gold. They have to return the gold within 7 days of complete repayment of loan. All these things need to be complied with. For borrowers, they restrict easy access to credit because it is difficult to furnish the ownership details. That is one biggest thing. Okay, so it will restrict the access to the credit for the rural and semi-urban areas, or maybe many companies, may deny gold loans because they have to adhere to lot many compliance rules, right? So that can also be a reason. These can be the implications. So, my dear students, we touched upon many issues with respect to the current affairs related to financial sector and digital payments, which is very important topic. I don't just put the data, facts and concepts, but also I bring in analysis, right, which is totally examination oriented, right? So I hope you get benefited maximum with these videos which I am bringing through the Joyful God YouTube channel. I respect your feedback and concerns. I always adhere to the examination demand, and I want you to understand economics is not a subject which requires you to mug up the concepts and revise a standard textbook. Economics is a living subject. You cannot restrict to the class notes or standard textbook, right? You need to understand day by day current affairs thoroughly, right? Also, you need to connect them to the basics that you have learned from the classrooms, classroom notes, as well as classroom textbooks. So that is why these current affairs videos will help you for both your prelims and mains preparation. I hope you get major benefit from these videos. And at the end of this video, I'll be attaching MCQs as well as mains questions pertaining to the discussion that we had just now. So practice them as well. You can reach out to me through my Telegram ID @J Ganesh, JGANESH, J Ganesh. Okay. So there is also a Telegram channel opened. All these PDF that I am presenting in the video will be given in that Telegram channel. You can get access to them as well. I hope your economics preparation will be sound and informed and qualitative so that you can achieve the maximum success in your prelims as well as mains examination. Thank you once again, and I wish and hope you will succeed in your desires with honest and rigorous efforts up to the best to maximum abilities you have got. All the best. See you again.